Happy Friday, traders. Greg here with the market update. Okay, so this week we have had some very good reasons for market to trade lower and for risk to trade lower. And the main one has been obviously what happened with US CPI at the beginning of the week, where we saw headline CPI go from 2.4% up to 2.7, and core from 2.8 to 2.9. So CPI inflation is going in the wrong direction. It's going back up towards 3% and away from the Fed's 2% mandate. We did obviously get the bond market react to this, and we have seen bond yields this week a lot higher. US 10-year yields up around that 4.5%. 2 yields back at 2.9. 30 yields up at 5%. When yields do these sort of moves, and especially when they are up towards range highs and dangerous levels, it generally does impact on risk, and certainly it caps it from further rises. But certainly that has not happened. What we've seen is that the equity markets have completely ignored what's gone on with the bond market. And we're seeing new record highs, Nasdaq and S&P. So look, the equity market obviously is in a very good space, and it just goes to show just how bullish these markets and sentiment is. That it can disregard something as important as the bond market. Having said all of that, July is seasonally, we've talked about this quite a few times, it's a very positive month for equities. And so obviously some of that seasonality is obviously working out, this month. Now what we do have is August coming up after July, and in August that's when the tariffs go live. So potentially for bears, I'd suggest maybe being a little bit more patient, not trying to pick tops just yet, because this sentiment is so bullish at the moment. And maybe August will be the time when potentially we might see some volatility and two-way volatility, and maybe some retracements in the equity space. Anyway, another market that's worth talking about as well, it's certainly very bullish at the moment, is the crypto space. We have seen in the last week or so, Bitcoin lead the charge when it made record highs around 123,000. It's currently trading around 120. But altcoins now are starting to shine as well, and that's been led by ETH, which is trading up around about 3,500 area now. But some of the big alts like XRP, as we speak, have just broken new record highs. So it seems that alt season now is in full swing, and we know from previous times, just when crypto starts to rally, it can explode. So yes, something to watch in the crypto space. It's also been helped by what's going on in the US at the moment. They're passing legislation to get more clarity for crypto assets, and they're also working towards giving retirement funds access to more alternate investments, including obviously the crypto assets and space as well. So there is some positive fundamentals helping that cause. Okay, so moving along, locally here in Australia, we did have some important data out yesterday. That was employment data, which was actually a big surprise to the market, where the market was expecting the unemployment rate to sit around about 4.1%, but it jumped up to 4-year high, up to 4.3%. So that was a bit of a shock, and at the same time, if you looked at the actual detail of the employment report, it was a big loss of full employment jobs, around about 40,000. Yes, that was taken up. We had positive about 40,000 for part-time jobs, but it's never good seeing the full-time jobs getting smashed as much as they did. So immediately market has priced in 100% that RBA will be cutting rates in August. We did see the Aussie trade lower immediately after that number, and it was trading before that above 65 cents, around 65.20, and it fell about half a cent. But I would not go chasing Aussie lower, selling Aussie, for the simple fact that Aussie is also a risk currency, and we are seeing risk smashing record highs. We're seeing a big risk party. So I don't believe that you're going to see any sort of big follow through just because the RBA is going to cut next month. So potentially bias is even buying Aussie on this dip. ASX obviously loved the unemployment news. They love it when people are losing jobs because that means rate cuts, and equities love rate cuts. So yes, ASX surging record highs, and obviously helped by what's going on in the US. Today, this morning in Asia, we do get some inflation CPI data out of Japan. Now CPI in Japan, headline core, both above 3% or even around about 3.5%. That's well above the 2% where obviously the BOJ wants to see inflation sustainably above. So really, if you have a look at it, if the policy rate's only 0.5%, Japan's still running negative real rates of about 3%. How much longer can that go on for? Well, I guess, look, if Japan finally gets a trade deal done with the US, and this is one of the uncertainties that BOJ has been on hold for, then I imagine that really there's probably no reason why we can't see that next rate hike. But in any case, look, dollar yen has been on a tear. It has been following US bond yields higher. It has traded up as high as obviously just above 149. But we have found some good resistance there, and then obviously above 149 we got that psychological 150 area, and it has rallied quite strongly from 142. So at the moment it seems as if dollar yen certainly has at least stopped going up. Potential cheeky shorts with stops above 149. And yes, if US bond yields are sort of capped at these levels, which are very big levels, maybe you get some downside there at the moment. But obviously, if that inflation data comes out a bit stronger than expected, then that should help the cause as well. Going to the weekend, not too much on data-wise or any sort of event risk, so I imagine the risk party continues. So good luck with your trades, have a great weekend, and we'll catch back in with you next week.